Hi, I'm Kristin Jamieson with Success Mortgage Partners, and today we're going to be talking about interest rates. As many of you know, interest rates have continued to rise since the presidential election a couple years ago. We haven't seen any relief, really, with interest rates going back down. They've only been on an upward trend. And under some loan programs, we've watched them rise almost 1.5% in the last 2 years. So what does that really mean? Rising interest rates means it's a sign of a stabilizing economy. And if you look at all of the reports out there, your unemployment rates, your job growth, your non-farm payroll, all of these things that factor into interest rates, the economy is stabilizing. It's better than it's been in many, many years. I mean, inflation's going up. Everything is just on the rise. And as we're watching interest rates rise, we should also be watching our 401ks rise as well, or our investments. We're watching our investments go up. So as the market continues to stabilize, it's only predicted that rates are going to continue to go up in the foreseeable future. So what does that really mean in your mortgage loan application? Well, as interest rates go up, the amount of your monthly payment, your principal and interest, is going to go up. But it's also meaning that the days of lenders being able to offer higher interest rates and give closing costs credits is slowly going away. We're dealing with what's called market compression, and without trying to go into too much detail, at the end of the day, investors that buy loans on the secondary market aren't paying as much for those loans. People that have a 3 or a 4% interest rate are less likely to ever refinance out of that, as opposed to somebody who has a 5.5 or a 6% interest rate. So investors are limiting the amount that they're paying for it. Therefore, the lenders don't have as much money extra to contribute back and help offset some of those costs. So if you were thinking about buying a home, you want to do it a little, sooner rather than later, because there's really no end in sight for the rising interest rates. Now, one thing that you can do as a homeowner in your mortgage loan application process is you can look at buying down the rate, or paying for points is what it's called. And ultimately on our rate sheet, we see a rate, we see either no cost credit or cost for that interest rate. And sometimes it makes sense to pay a little bit of money to get a lower interest rate. On average, every 1/8%, depending on the loan amount, is really going to change your payment about $25 a month for easy numbers. So if you had to pay $5,000 in discount points to save $25 a month, that benefit's not really there, because most homeowners will sell or refinance in the first 7 years of owning their home. But if it's only $500 or $600, you recoup the money in about 16 months, it makes sense to pay those discount points to get a lower interest rate. Another thing, rising interest rates aren't always that bad, because the more mortgage interest you pay, the larger your income, your mortgage interest paid deduction is on your taxes. I asked an accountant quite some time ago, what do I do? Is there anything I can do to limit the amount I pay in federal income taxes? And he said, Kristin, I have to tell you, you just need to buy a bigger house, which that seems scary to me. I loved my $1,000 mortgage payment. I loved everything about it. But he said, you either pay it to the bank or you pay it to the IRS. And if you're paying it to the bank, you're living in a bigger house. If you're paying it to the IRS, you just lose it. So that's something. Don't always think of interest rates as being bad, because there are benefits as interest rates go up, and cost savings on your federal income taxes. Another thing, we're seeing a lot of people go new construction these days. There is not as much resale, there aren't as many resale homes on the market. So people are looking to build homes for their new home purchase, which is awesome. To live in a brand new house is amazing. But one thing you need to consider, if the build time's 6 months, what are interest rates going to do in the next 6 months? If you're given a payment now and you're not locked in, it's more than likely going to go up. And, where's your risk threshold? How much wiggle room do you have in your approval for your payment to go up? We do have extended rate lock options at Success Mortgage Partners. So if you have any questions on it, whether it makes sense to do an extended lock or float it out through construction, just make sure you reach out and let us know. Lastly, I get a lot of questions on, especially during the pre-approval process, on what's my interest rate. Well, interest rates are tied to the borrower and the property. So unfortunately, nothing can be locked in until we're under contract to purchase a home. So if it takes you 90 days to find a home, and we talked about interest rates 90 days ago, I'm sure they're not the same today as they were 90 days ago. So just always keep that in mind if your pre-approval is close, that is always something that can happen as the market continues to stabilize and interest rates continue to go up. If you or anyone you know has any questions on interest rates, how they work, or how they affect your monthly payment, please make sure to reach out to myself or my team at 352-242-1535. Thanks and have a great day.